Hi, today I'm going to show you Remai, the newest, most amazing way to do financial research and do financial writing. If you want to do research on any financial topic or communicate with your investors, clients, readers on financial topics, there's nothing like Remai. So the first thing we're going to look at is the recent news that happened yesterday. Fed Chairman Powell had a press conference in which essentially he threw out most of the things he said over the last few years and assumed that there will be like 3 rate cuts this year, possibly. Now, there are lots of questions around this conference. I'm not going to go over everything because I want to keep it short, but I'm going to go into Remai and I want to do some research relative to the shape of the yield curve because clearly what Jerome Powell is talking about is going to affect the shape of the yield curve. So let me show you how Remai works. I'm just going to go ahead and type in discuss yield curve shape over the last 3 years. And the model will work. And we see the result here. Let's go into the report. Here's a full write-up with charts. Notice that it took only a minute or two. Think about what this research would entail if you did it the old way. You would need to have a number of financial websites. You would need to actually get the charts, combine them, do a write-up. Here we have everything ready in a couple of minutes. Now let's see what this says. The yield curve shape over the last 3 years has been dynamic. Basically, it's saying that it was upward sloping initially. The slope was 1.46, which is a 10-year minus 2-year. And however, the research says this changed in the following months with the yield curve becoming inverted in July 2021. We can see that right here on the chart. Okay, it starts out positive and then it inverts. Then it's negative. You see the negative value for the 10-year minus the 2-year. And the yield curve remained inverted for the rest of 2021 and most of 2022, and it's still inverted. However, starting from January 2023, the yield curve began to shift back to an upward slope. And you see that right here on the chart, 10-year chart. Notice that Remai gives you everything. It gets you the charts, the data, and the write-up all in one shot. And it can do much more sophisticated things than this, but I just want to point it out. So the yield curve is inverted and de-inverting. For those of you that know financial research, you will know that this is a typical sign of a major recession. And that's why I believe Jerome Powell signaled rate cuts, even though according to the data from the Fed, which I believe some of it is fabricated, there should not be any talk of rate cuts right now. The economy is growing, unemployment is low, inflation is still over 3%. He should not be talking about rate cuts. Why is he talking about rate cuts? Well, because the yield curve inverted and de-inverting, a main sign, one of the key signs of the upcoming recession. He cannot have a recession that is related to monetary policy in an election year. That is why he's talking about rate cuts. So notice how we use Remai in just 2 minutes, 1 to 2 minutes, we get an answer to a fairly elaborate question and saved ourselves at least 30, 40 minutes, maybe an hour of work. So the savings of time is really not 10x, but more like 20x. Stay tuned for more videos. I'll do short videos like that, doing research on financial topics with Remai. Thanks.